Good afternoon, traders. This is Christian from Choppy Trade Group, and this is your end of day market recap for Thursday, February 6th. Choppy day on our hands, but I think right now it's all about earnings and probably will be a little bit about tomorrow's jobs report. I'll get to all of that. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving any advice or recommendations. Everything that we're going through is for information purposes only. Please read the full disclaimer there. So what did we get today? We had a little bit of underperformance with IWM today, which was down about 1/3% today. The Qs outperformed today. They were up 0.5% today and pretty resilient. There was a bit of a sell program that washed through this afternoon, which my view is that price, some of the S&P and the Qs just kind of caught up to the price in the small caps. Just that was just what appears to be just a sell program. And then there was a big MOC buy-in balance at the close for $3 billion or over $3 billion that someone had to buy at the close. So sometimes these big MOC imbalances have to do with some pension rebalancing or just something that has to be done by some of the big like aggregators in the marketplace. So in any event, let's go through a couple of, I think that the price action was pretty dull today. There just kind of seemed to be like a lack of momentum, which I think is perfectly fine considering, where the price action has started from in the beginning of this week. Sometimes when we get to Thursday, we kind of get tired. And I think we've got the jobs report, which I discussed yesterday. I'll bring this up really quick, but if you want more about this, I discussed it yesterday. But basically, they are implying they're looking for kind of a similar number that we had last month, which was less than 200. So the expectations are a little bit low. Now, what will happen if the number comes in hot, like 220, like it did last time? It's probably the market will sell off, right? And if you look to see what happened the last time around, and I'll bring this up for you just so that you can see. But if we go back to January, and I'll bring up the second here. And here's what I'm referring to. 140 is what was expected, and we had 223. What happened? The market sold off pretty decently. Small caps are usually the most sensitive, and they fell 2.2%. As good news is not considered good economic news is not considered good for the market. So I would be on watch for that tomorrow. I don't know. I'm not an economist, so I don't know where they get these estimates from, but it does seem like a little bit of a lowball number to me. So I'll move on from there, but that's at 8:30 tomorrow, and that will be important. So I think that's kind of why the market just ran out of some steam. Looking at some of these names that reported after hours, let's go to the big guy, Amazon. Looks like Amazon has come back to basically like unged. These numbers, I went over this earlier in regards to what the Mag 7 or Mag 8, depending if you include net. And it has not been a easy quarter for the big tech and communications companies. Netflix set the bar really high. It was the first one to report, was up 9.7% on the day of earnings. Meta also has been up 13 days in a row or something like that, so that's pretty darn good. Apple, Tesla had a good reaction on the conference call, but has not had any follow through. And then Microsoft and Google, not so good and to the downside. And now Amazon, which missed on their sales number in terms of expectations. So again, I think number one, a takeaway from this is the market has handled this very well. There's been a lot of rotation, I think, out of these names and into other areas of the market. I was talking to somebody about this pre-market and was saying, "Oh, geez, this must be very bad for the market to see, these big companies go down." And I don't think that that's the case at all. I think it's a rotation out of these names that are just mature, right? It doesn't mean like there's overall market weakness. It's the evolution of any company. After a while, it goes up and it beats growth estimates, and sometimes they just get too big. and it's tough for them to continue to grow at the same clip and to beat expectations when you know everybody knows about these companies and so on and so forth. I'm not saying that it's the end of the day for these companies. I just think right now there's better things that are going on in the market. One of the things that we talked about too at the end of January was the market was up about 3% for the year, but tech, which is about 31% of the S&P, was actually lower for the month. So again, there's a lot of other things, better things that are going on. And if we look at some of the movers here after hours, what did I? We've got several. I mean, you've got some really good stuff, and you've got some stuff that's not so good. Let's talk about the ones to the downside first. I'm just going to zoom in, so this way I'm not killing your eyes here. You have Bill is down 28%. Elf, geez, another bad quarter for Elf, down 21%. That name has really fallen from grace. Skechers down 13%. You got a couple other names in there too. American Semiconductors is down after the close. I don't know what that's about because I think that name was up uh, on earnings. Docs is up 23%. MPWR, right? So again, MPWR is, I believe, more of a semiconductor company. It's hit or miss with these semi companies. Fortinet is up 11%. That's very good for the cyberspace. I think CrowdStrike is making a little move there after hours too. Affirm right now is up to 68. That was my trade, my earnings trade that I sent out earlier on Substack. We'll look at that in just a second. Net is up. And so again, there's some good stories in here. And like that's my takeaway is that, you know, I continue to compile a strong earnings gap list because those are really going to be your possible leaders for the next quarter, you know, the names that did well. So I think that we're getting plenty of them. So, and, you know, these are also names that you can buy in the dip. And, you know, we want to be going after strong companies, not weak companies. So that's what we have here. I'll bring up my trade. But here, right into these, into this VPOC up here, right? This VPOC, if you look at the daily, which is how I priced my call spread, I was looking for 69.80, right? So that's the area of where, oops, where there was um, overhead supply, virgin point of control up here. So a lot of volume up here. We have not returned, and lo and behold, we get right up there and a little bit of a rejection so far. But so far, it's hanging in there, right? And bring up my trade idea from earlier. Yeah, so the implied move was 15%. So this is what I sent out in Substack earlier. Earnings trade idea for tomorrow is 64.69 call spread for $1.70. So we'll see how this plays. If I was just outright long calls, I would be probably selling stock into this. You know, you can always delta hedge. It's one of the things that if you're trading options and you don't know how to delta hedge, then you should not be trading options, right? That's very simple, right? So this, when you have a call spread, it's a little bit harder to hedge, but regardless, you know, binary options are very, excuse me, earnings season earnings reports are very binary nature, but good to see this one has a chance for tomorrow. So that's where I'm going to kind of leave it for today. I will go through just really quickly where the indices are at. Let's bring up the S&P. We're still inside value for the month, but if you've been watching my videos, you know, on a daily basis, you know that I've talked about the bullish 80% rule. That did complete on the 1 hour chart, right? So we got to the top of the value area. Here's where we broke into the value area, actually broke back below, broke back in, and we went from one side of the value area to the other. The same thing happened for I believe the same thing happened for IWM too. We got to the top of the value area. Here was the 80% rule was complete. And complete on the 1 hour chart and the this week's value area and the value area for the month. So that completed. Again, if you were reading my Substack, I talked about how the bullish 80% rule was in effect, looking for a move from one side of the value area to the other. Boom, you got it. So it's the sense right now, and I'll kind of just leave with this. I don't know what the market reaction is going to be to the jobs number. I think at this point, everybody it probably wants to lighten up on risk going into the weekend, considering the last 2 Mondays have been kind of horrific for bulls. So, you know, maybe we buck that trend because, you know, the market does that. Whenever the market or everyone anticipates something, it doesn't happen. The market will get people, will surprise people. Once it's done surprising people, then it changes that pattern. So I even took down some trades today because I saw that there was lack of momentum. And so again, I wouldn't be surprised if we actually rally, just because that's not what everybody is expecting. However, I'm following the playbook for now, and that's why I took off some risk, because I think that we've made a nice move since Monday, and I'm not being greedy. I have gotten burnt a couple times, like a lot of traders. I've gotten burnt with these ranges, so I took some trades off. I take all my trades off just because I'm worried about that? No, I don't. But I just lighten up so that I'm not, I don't have too many trades on. And I did get to that point this week where I was putting on a good number of trades. So just lightened up a little bit, and going from there. Like one name that I kept on, Morgan Stanley. Very nice move today, out to new highs. There's another trade that I had on since last week, Lemonade. This did make a turn, but right into some overhead resistance. Overhead supply was right here. And I was able to take a target at 37. I knew that VPOC was sitting right there. So again, the MarketWebs valuer is giving you a great sense of where that overhead supply is. You could also get a 7-day free trial when you go to my Twitter page, click on the pinned tweet, and you can get involved in the MarketWebs indicator for free for 7 days. Guys, have a great night. See you tomorrow.